Well, Pete, welcome back, everybody, and it's a pleasure to have you back in the studio this fine Monday morning here in Sydney. Weekend that was, talk me through it. The week that was, talk me through it. Let's chat.
Sure. Well, last week took us through as far as Monday starting Memorial Day, and it was a 4-day week in the States. Ended on Saturday morning very, very strongly with our numbers here. NASDAQ up 1.5%. Non-farm payrolls, 559,000 new jobs created, or new people asking for a job, and they got a job in May. And unemployment in the States went down to 5.8. Gold rallied strongly. Oil's closed above $70 for the last few days. You've got WTI now approaching that 70 number. So that's going to be an indication just how strong inflation. We've got numbers coming out this week in the States, CPI. You've got Eurozone CPI hit 2% in May for inflation, which is just really shooting the lights out. So that inflation story, Yellen saying we're going to raise rates and looking at rate rises. Canada tapering back, and they're all in this taper program of how quickly they pull the taper off the market, and interest rates naturally will ratchet up. Don't know how it'll affect the property prices in Australia when you start adding 3 or 4% to mortgages. So it's going to be a very interesting 19.5 months till the end of next year.
9.5, very specific. Well, there's the week that was. There's a bit of a summary, I think, on the week that will be. But before we dig into the week that will be, Pete, you've got your favourite paper in front of you, which is the FT Weekend.
Yes.
So, big economy set to unveil deal on taxing multinational profits. Now, how about that? People pay tax in jurisdictions they operate.
Well, that was the Google story, naturally, and that's why that attracted them so much to Ireland, and they did everything out of there, and I think they were playing a flat rate of 6%. Don't hold me to that. That was just a number I heard spruik a long time back. So there's the issue at hand. You've got the big multinationals not paying fair share, so they're going to be hit up 15%. Yellen will probably hit them even harder, and maybe they even go to 30%. So let's just see what happens to all these big corporate behemoths. Wouldn't be a good time to be, maybe it's a time to short media. Maybe it's a time to short a lot of these stocks if they're going to pay far more in tax. The taxman gets the
no dividends.
They get the dividend. The taxman gets the dividend, not the shareholders.
Oh, big game afoot. Now, listen. If we look around the region very quickly, the latest news. We've got the oil movements there. We've got a little bit of global cases, and this news is coming to us from our friends at Bloomberg.
Absolutely.
Yellen, to your point, Pete says that she's keen on the higher interest rate play, and that might be a plus for the Fed. Yeah, China's cautious consumers. Now, that's an interesting point. Why is China cautious? We're not really all that sure. And UK businesses raise fears of future lockdowns as their cases start to rise again. So, you know, it's a tough place to be, the business of this in business in this
environment,
phase.
And certainly globally. Yeah.
And I think the other interesting thing that I sort of saw over the weekend that Bloomberg put out was the AI-powered trading solutions. You know, analysing global stocks in such a short period of time and putting trades on behalf of people. I mean, so who has the advantage there? A human with a brain and a terminal in front of them, or the computer that's just programmed to actually just play the numbers?
Well, in currency trading, expert advisors, as we term them, are algorithmic-based trading, and many people can buy that technology for a small fee or millions, or tens of millions or hundreds of millions as far as the success or failure of that intellectual property. And that's what hedge funds do. They have algorithmic trading. So they in turn can capture small movements in markets and see reversals or opportunities. And that's where the retail traders very much embrace. Because as we know, and you and I talk about a lot of this as far as the behavioural side of traders, when they're out of the market, so in other words, they're in the kitchen and they're cooking, or they're being with the kids, they're not trading. So if they've got these expert advisors working for them, the algorithmic, they can have open positions for days or weeks or months and not have to be sitting in front of a screen. You can see the benefit of that.
It's an interesting scenario. So feeds across really quickly to the Financial Crimes Agency investigating the National Australia Bank. Now, we've seen the CBA under fire in Australia, we've seen Westpac under fire in Australia, now the National Australia Bank under fire.
Yeah.
Four Corners last night, of course, was covering the global drugs trade. And
I read a bit about that.
Money doesn't move without banking.
Absolutely, and money laundering plays a big part as far as financial services. I just did some CPD, continual professional development, and one of the subject matters last week, and you've got to do so many hours a year. And one of the, it was 3 hours at the paper, and it dealt with front running. So in other words, that's what banks were doing. They would get the information. You wanted to change some pound to yen or whatever, and they're saying, well, hang on a second, we'll front run, we'll get a better rate, and you come in later and you get a worse rate. And this is where a lot of those bonuses and everything, so they're writing about that now. It's very much a part of ASIC's agenda as far as locking criminal activity up. And so it should be.
And so it should be. Righto, Pete. Let's look ahead at the week that's coming down the pipes for traders here in Australia.
It's a big week, Will.
It's a big week. You know, we've covered that. So the ECB balance sheet. What's happening there?
Okay, this is the issue at hand. You've got, first off, as I mentioned earlier, inflation in Eurozone 2%. The PEPP, which is the taper, well, pardon me, it's the funds going into support through quantitative easing and asset purchases and so on. So there it is. I've forgot the terminology. Pandemic Emergency Purchase Program. It's PEPP. So it's been a dramatic move to the upside. You saw zero to 6.5 trillion or billion, pardon me, euro in that period of time. So that is 6.5 trillion. Euro has been pushed in as far as balance sheet. Now, as you remove that, we've spoken for many months now, you cannot spend tens of trillions of dollars or euro or whatever and not get inflation. So Yellen's saying we're going to see inflation, so naturally we're going to see interest rates rising. Eurozone has always been that headline, can we get to 2% inflation? Well, they did it in May, so again, you've got inflation. What happens here? I mean, I've said it to you a number of times. Inflation in Australia, I reckon, if it's not 5 or 10%, what is it? You know, when you strip this out and strip that out, don't strip anything out. My wages get after tax. I can't strip anything out. So fuel prices, everything just costs so much more. And that in turn is a real handbrake as far as the economy and spending power.
And that's where it's at.
Mightn't be if you're an RBA banker, mate. Might be in those lovely big ivory towers up there and, you know, on $500,000 or $1 million a year. But reality land, it's a different world. It's a different space to the big bureaucrats and the fat cats. Well,
it's a fair call, Pete. There's some guys out there earning some reasonable money and they probably deserve it. And there's plenty of people that deserve a bit more. And the question is, how do you make it work for them?
Absolutely.
Now, in Canada, what are they talking about here? They're talking about the holdings are falling as they step back from this whole emergency stimulus. So the story consistently is stimulus. What next?
What next is tapering. What next is pulling that rug from under the feet. We've had Canada has absolutely boomed to the upside as far as house price appreciation, probably more so than even some of Australia. Sydney's out of control. When we even talk on that as far as behavioural side and what we've experienced in the last 12 months has been absolutely mind-blowing. Canada's the same thing, and also they're looking at pulling that taper back and raising of rates. So that's all to do with the big storyline, which seems to be we're grabbing that by the tail at the moment. It's like a big dragon out of control. Inflation and what impact it's going to have to higher rates.
What will it do?
What it'll do is this. Good question, and I don't know whether you wanted me to answer it. I'm going to tell you what it'll do.
Well, Peter, I never ask a question I don't want you to answer, but if you can answer it very quickly.
Very quickly. I'm going to answer it real quickly. I think we're going to go back to a very debt-driven issue come next year about what happens to residential real estate prices, and all of a sudden you've ratcheted up interest rates by 3 or 4% as far as serviceability. So are we going to see negative growth or flatlining of growth for a very long period of time as far as asset price appreciation? That's the point I'm getting to.
And that is a real question. Well, let's track that. Let's actually build out an index. Let's actually start monitoring this.
We will. We'll do that together over many months ahead.
Week on week. Well, let's actually start reporting around that, because I think that's a very interesting point.
Well, you're going to look at auction clearance rates, you're going to look at serviceability, and you're going to look at interest rates. So any of those inputs greatly affect behaviour.
And there you have it. Forced to or chosen to. Let's see what happens. Now, over here, back on the charts, US Consumer Price Index. The inflation in America will likely surge further in May. If we can believe what's happening here, which we can, of course, because historically it's recorded. The forecast suggests that it's actually going to keep on trucking.
Absolutely, brother, and I think you're going to be a 4.5 to 5.5 to 6% handle as far as inflation. And do they actually get it under control?
I just want to make sure this is not a doomsday conversation, right? This is very manageable.
That's not doomsday. That's reality. There's the graph.
Now, it's manageable if you do what?
It's manageable if you I'm not a central banker, but traditionally, what you do to stop inflation is you raise interest rates. So that stimulus-led recovery you pull that back, the stimulus, and you raise interest rates. That's what you would normally do in an economic cycle. These are untraditional times. I haven't lived through too many pandemics. You were here in 1918, I wasn't.
First life and a second life, though, because they say they say you do come back in a new format, but I don't really.
You're looking good for 100 years old.
I'm just wanting to say that you can't,
I'd love to see a school
you can't
reunion.
dial a hotline and you're not going to get a reading. So let's move forward. UK GDP growth and production, Pete. This is looking a little interesting.
Yeah.
Back in June, July last year, though, those the chart suggested there's a bit more happening.
Absolutely, and we've got those numbers being released this week. So we've got those UK numbers as far as GDP and some
Pretty
other.
interesting, though. If you look at this, right?
Yep.
In January, it was actually in November and January, we're seeing a little bit of negativity there.
Well, that was a rebirth as far as more COVID numbers. We're really in a pretty
COVID
hard
numbers,
way in November.
Brexit, uncertainty,
yes,
all
Brexit,
of these things.
That's another
But
point.
You go back to June, July prior year, mate, that's the middle of the pandemic, and they were cranking it out still.
Yeah.
So what's
Yeah.
that? A tailwind off prior production?
Yes, it would have been, because you had a reasonably good first quarter. Well, the first off, that January of 2020.
Pete, you know what it is? It's the Meghan and Harry moment. Meghan and Harry pulled out, went to the US, and it
Just
all
had
went
another
downhill
baby.
from there. Look at that.
Little girl,
Look at that.
Elizabeth. So that's congratulations to the proud mum and the family and the little baby. So we wish the little baby a very long and wonderful, healthy life. Sterling, and just on that, may get a boost from the barrage of April production numbers and what we're expecting. So I think that there's a little bit further upside for the British pound.
Well, that's a good thing. Silver. Let's look at the 4-hour chart on silver.
Got spanked, and gold got spanked heavily last week at the tail end of last week. The last 3 days, US dollar recovered. Gold got absolutely, washed out to 1850, 1860. It's back at 1895, I think, at the moment, approximately. Silver wasn't as violent, but it certainly was trended back, and then all of a sudden it's moved back forward. So it's precious metals have been a good trade over the last couple of weeks. Volatile.
The volatility on a day-to-day basis gives you the trading opportunities.
Well, when you're seeing $20 and $30 and $40 moves over a day, you can jump in and take a couple of bucks. It's not a bad move. And these charts, you can see that well as a 4-hour chart. You've got traders putting, 10-minute charts. So it's all to do with what your timeline is as far as you're trading, the volatility.
Mate, not much to talk about here. It's still trending in the northerly direction. There are a couple of trading, if you look at 2 hours ago, basically, thereabouts, you're looking at your opportunity to profit today.
Yep.
And no doubt that will continue.
Yeah, more volatility, absolutely.
All right, let's look at the New Zealand dollar, the US dollar.
So that just really demonstrates over that time frame what those moves can be. And again, that's why traders trade short periods of time. They can really do a hell of a lot over a matter of hours, and you've got 5 or 6 different positions open that across different currencies. If one's not moving, that's fine, you just dump it. One is moving, you jump on that one.
Mate,
catch the bus.
Similar story, slightly different chart. This is a daily chart, not a 4-hour chart.
Yep.
But again, showing the same sort of movement. But pound to Japan.
Yep, exactly right. So that just really, again, demonstrates the opportunities that exist in those markets.
Well, and all we're really seeing is that the researchers have pulled out some pretty good charts this morning for anybody that actually bought in and picked up.
And you can see that blue line, that 200-day moving average, and it's above that where it was, in that period, middle of the line or middle of the graph. It's below the 200-day, and then all of a sudden, pardon me, off to the races, and that's what traders again look at.
Yep, no, it won't take too long about this
and
one.
And that 200 moving average as well, that was a classic there, that it's more or less probably 40% along on that chart, then all of a sudden, boom, 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 and it really hit off.
Pound to the US, okay, travelling pretty well too. All right, so let's take a look at this chart here. It's the only chart that we're on the deck that's looking like it's actually got a depreciating play.
Yeah, well, exactly, and you saw that US dollar, Canadian dollar. US dollar gave up a little bit of that groundswell that it had. It went to about 90.5, and that's where gold really got tanked. That was the storyline as far as interest rates last week. A bit of other information that came out over the last matter of days of last week, and that US dollar gave some of those gains back. Canadian dollar went a little bit stronger, as we mentioned earlier, as far as interest rates and so on, and that just demonstrates that moving average, 200-day SMA, it's a negative trend, or it's a falling away trend, and that's where traders short a market and benefit.
All right. Well, that's the last chart of the
God
deck,
bless you.
Pete. So let's do the quick run and dump. The week that's running ahead, we've got not a lot.
Quiet week. I think that's really the terminology best to use. We've got the Eurozone, we've got the Canadian. We're really a quiet week. You've got Yellen. That's a worrying thought. You know, if she's coming out and saying you're going to see higher rates, I'm worried about ECB. Will they put something forward as far as those that taper talk, as far as the PEPP that we mentioned, because that expires in March of 22, so that's only 9 months away. And we've got that inflation number coming out of the States. That's going to be a wake-up call. So, yeah, I'm just looking at, a great week ahead.
You know what we didn't talk about? That was actually big news last week. China's rolled out the 3-child policy.
Yeah, exactly, which is great for humanity. And, I'm not here to tell them what they should and shouldn't do, but, you couldn't imagine living under a society that only gave you the opportunity to have one child over a 50-year time frame or 40 years. So thank God that they're seeing, they're realising they face... I studied that quite intensively actually at the Wharton School as far as the life phase of people, and China had a very young population going back about 40 or 50, 60 years ago, but now they're very old, and that one-child policy it's going to create massive issues as far as longevity and the ageing. Now they're going to a 3-child policy, so it takes 25 years for that to really start. They pay tax and so on. India is the great unknown because it's such a young population, big families, and probably similar numbers as far as population base if you're looking at China versus India. So I still say this is India's century far more than China's.
Pete, good way to wrap it. Let's talk about that a little bit more next week.
God bless you, Will. Take care. Thank you.